subscribers to that. You saw it. Give me a second here for this to come up. Anyway, this Chevron, while it lagged a bit. While it lagged a bit, it looks like you can play a little catch up here. However, all right, so YouTubers here, let's take a look at the broader markets and a few things that we'll be looking at in the chat room here today. So I was talking about Chevron here when I first came on, and I really like this pattern, and it's holding up here. And these oil stocks have been influenced by the price of oil, but finally starting to play some catch up. But oil here it's backed off a little bit here, but had a nice breakout above these highs. So these oil stocks should continue to outperform. And we've got LEX that broke out. We've been talking about this to our letter subscribers for probably at least a month or so. You know, it's been jiggling around here, finally getting out of this range, suggesting it's going to continue to go higher. Now, you can see these four broader markets here. They've just been chopping around in what we've been talking about for probably the last couple of weeks or so. And, you know, we were in the camp of thinking this would go down until this day right here that broke lower, and it ended with a minor bottoming tail bar. That might be a little rough for you to see, but that little minor bottoming tail bar sets up that breakdown bar failure. And then we got the inside day, and then so on and so forth. So today, you know, the futures are up here and hanging right up near the high. So what's happening now is that, can this thing finally get going? Let me just get obviously got a very clear line of overhead resistance. See if these futures can push up. What's been happening, you know, pretty much every day is that buyers show up aggressively on pullbacks, and then as soon as it gets to resistance, they back away from it. And you can see right here on the 60-minute chart, this chop that up near the resistance, back away, up near the resistance, back away. But now it's holding on to it, and it's holding here this morning. This is a live chart. You can see in the lower left where it's going to try and push through there. Now, as it gets through, we'll all see if buyers want to continue. But if it does, unless there's an immediate collapse, and of course we have no way to know whether it will or not, that now creates this as a solid reference point of support. And when I say solid, that means it should hold. And if it doesn't, well, down we're going to go. So we've been looking for this to move higher since this day here as this developed. And of course, over here, this definitely shook my confidence in it. And then, you know, markets renewed, oh, things are okay. You know, nobody's going to press the, you know, send the missiles away, or the tariff wars are not going to start. And so as it's gotten tighter and tighter, it looks to me like this is getting ready to break out. And we're going to see if today is the day. We're looking for Apple. We actually put on a position in Apple, and it's been jiggling around. We gave it quite a bit of room. And so now, just like the markets, if it can get through here, I think it's got a lot of potential to move up. So all depending on whatever news might come out to jitter the market again. But clearly buyers continue to show up in force, and we'll see if they're ready to push prices through this resistance area right now. Oh, on my interest list here of what's moving here pre-market, you probably all saw Bed Bath & Beyond getting shellacked here. Looks like that might be on the short list for today. I don't like the short side on gapping stocks that are going lower, even though they likely to go lower in a market that's going to be strong. The long side should be, have much better odds. Amazon coming back, which was rolling over here, starting to, and now it's popped up for 1440-ish. All right, so it's really still within the range. No big deal. So when we look at gappers, we're looking for stocks that are gapping up, that clear a range, and then looking for them to continue. And the same thing with the gap down. We're looking for those to continue lower, but we want to see them clear the range to the downside. Oil stocks are going to be, well, not all the oil stocks. I think Bank of America and a few others begin to report tomorrow, and then they continue to follow through as earnings reports begin to pick up. So we'll see how they all come out with their numbers, and that is definitely something to keep an eye on that can propel the markets in either direction, depending on what they do. NVIDIA, it's been a favorite of institutions, and it's been consolidating for a long time. It's gapping up here just above 230. And so these stocks that look like this on the daily chart with these bottoming patterns, they're really not that attractive for swing trades, but they can be for intraday traders, meaning, and just ignore that 200 moving average, and the reason for that is over the last several days where they've been making these bottoming patterns, if they can clear here because of the way they came down, they have the probability to begin to have sizable moves to the upside. Now, for day trades, why not? For swing trades, they're questionable, especially in a market where one day is party time and the next day is manic depression time. But if we do get some legs in this market, these stocks that are been chopping around here probably have decent moves. So when I look at something like NVIDIA, down below and breaking below the support versus, let me just get back to Apple to see the difference as we pick one stock versus the other. And not that Apple looks terrific, but you could see it's above those moving averages and consolidating at resistance. And as we look at it on an intraday basis, you still have that overall bottoming type of pattern. But what I like about this, and what the market as well, even though yesterday was a rather dead kind of a day, it held up and went sideways at resistance, and that's bullish price action. Of course, it has to prove itself by getting above that resistance, and that's your buy signal. Hey, good morning, Alex. UA buy setup. Let's take a look at it. All right, so let me just point a couple of things out here that you want to take note of when you see patterns. That being, yes, this pattern right here, that's a bullish pattern. Wide range bar up, consolidation at the top of the wide range bar, candle bodies at the top of the wide range bar. That's bullish. Now, this pattern typically doesn't go sideways this long. Usually by the third day, it's off to the races and higher. So two things. The market has been dead, for the most part, chopping back and forth. So on those down days, this is actually held up. This is a 60-minute chart. I'm sorry here. Let me go to the daily. But the concept is applicable to any time frame and what I'm explaining to you. So if we were looking at this intraday, we'd be expecting the same thing. Now this had a deep retracement, but it could get going here. What I wanted to say is, even if this was a daily chart, I'd prefer this arrangement of candles at a higher place versus, meaning not after a deep retracement. But let's look at the daily. I'm not crazy about this on the daily. It's a whippy bottoming type of a pattern. And where is it trading right now? It's really not doing much here pre-market. So again, this type of a pullback pattern, deep retracement down below the low of this wide range breakout bar. And that is a characteristic of a bottoming stock. So you need to just keep that in mind. And the odds are this type of pattern typically doesn't just take off and become a runner. I just know that this has to be a bigger bottoming type of pattern because the 200 MA is pointing to the downside. So it intersected, and it was below it. And again, it had to have been higher at some point because the 200 MA is, like a 45-degree angle to the downside. But so keep your patterns as we look at a pattern that might be made up of, 5 to 10 bars, whatever that might be. And within the context of, is it an uptrend? Is it a downtrend? Is it sideways? Is it bottoming? Is it topping? And so on. So you have to put your various buy patterns into the context of the bigger picture. Okay. That's it, guys. I'm going to sign off so we can, take care of our people in our trading room and look for new trades as the market's opening right here. Have a great trading day. All right, everybody, I'm going to switch computers here from this one. And just give me a second. I got to actually open up this eSignal platform on the other computer.
All right, futures pulling in a little bit, so that's fine, nothing to do. I'm still looking at my opens here. I'm seeing an opening low print of NTGR, which we're in. Okay, good. That gave me a little heart pressure there, thinking it was gapping down $5. Retail XRT is still going sideways here on the hourly, which is great. Consolidating up here, it'll be a nicer breakout on the daily when it happens. So as long as the market holds up, we're also going to be shorting call spreads on the volatility, VXX. But when I trade volatility, I do them hand in hand with the spiders. So if I'm not willing to buy the spiders, I'm not going to jump in the volatility quite yet. I mean, I'm already in some, but to add. What a beautiful pattern.
Hey, Dan.
Yes, sir.
Since they are, for the most part, inverse with each other, to choose the volatility and not just stay with the spiders, those volatility options offer different premiums that make them,
Absolutely.
Yeah, so I thought that would be an interesting thing to talk about a little bit, in that, if something is going to move the opposite direction, am I just doubling my bet just with an
No,
instrument going sideways the other way?
no, absolutely not. But these are easier to trade because of the contango. So it's not just inverse. The spiders can go sideways in a coma, and the volatility will still contract because of contango. Contango again is the rolling of futures to more expensive ones that the ETF manager has to do. I'm actually looking at going 2 weeks out now, for our advisory letter, just because. All right, the spiders are moving up here, and yeah, we'll come back and talk about that more. But I want to get into some trades myself right now. So let's see. I can go 2 weeks out. The 57 calls, and I just go way out just to make it a spread. I'll do the 76, 57, 76. Well, that's pretty wide. That's $19 wide. The midpoint is 61 cents. And folks, and when we give you a recommendation like the spider bull put spread, you know that we're bullish on it. So picking the exact days to expirations in strike price, it's 100% up to you to pick the ones and trade your style. So I'm going out to the 4-day now, which is Monday. I'll look some puts here. So look at volatility just crushing right now.
And it's anticipating, I would assume, and you can say otherwise, if you think what I'm seeing is that it's already well below the first 5-minute bars low, and the S&Ps haven't taken it out yet. It's high.
Absolutely correct. So no, they generally go together, but no, they are not lockstep whatsoever. Because this is also, spiders can be in a coma, and volatility can explode to the upside if there's a world risk event that just happened, like Rocket Man or Trump saying something, because it's people now scared and going to the market to buy volatility, and that's a human reaction. But it's a mathematical certainty, and that's what I was telling you, Craig, when I had that heated discussion with my friend from Montreal, that mathematically 100% over time, because of the way they're priced with contango, the volatility ETFs will contract, and not contract. They're headed to zero. You're constantly rolling them into more expensive products. All right, so we're 6 minutes into it, and we're pulling in here. So this is perfect. I didn't take any new trade yet.
And buyers are still shy at the resistance here.
Yeah.
See Apple, if it can get through here. Obviously, I want it to.
So maybe this will
If
be.
it holds up for a little while here, it might even be better, even if it holds for 15 minutes or so and then breaks higher, because it builds up which should be a more dependable support launch point.
Absolutely, and I would prefer even 30 minutes. This is an ideal 30-minute high day. And I would also mention XRT, same thing, Greg. 30-minute high there would be great.
Yeah.
All right, Apple, let's see what we can get paid. I know Greg gave an equity trade, but let's see what we can get paid. Wow, those 170s are only 23 cents now for Friday. So to get any juice on that, we'd have to go out another week. But we can go further out. We can do the 167.5, 162.5, it's 43 cents. Yeah, not as juicy as I liked. I think I'll just myself stick with the spiders because they still have high implied volatility. Okay, our NTGR is green again. Yeah, that shocked me when I saw $4 gap down. Yeah, Tim, I'm typically not going to show symbols all day because I got multiple computers. Only if I'm doing a lesson where I need to point to something. But yeah, let's look at FLIR for Tim. It's another one. I mean, I personally look at the daily and hourly bars, Tim. The way it's just sloshing around. Those aren't clean bars to me. So that would just be a pass to me. But if you wanted to, whatever fundamental, long term, whatever the case, then yeah, it's breaking out here. But your stop has to be way the heck under $49. Our Micron, we have short puts in both letters. That's doing very nice. Greg nailed the breakdown failure in that. And that's also one, something like Lend, went against us and we're going to have to roll. And MU also went against us. And Greg and I talked about it and we decided not to take the stop because of the bullish weekly. And so this one worked out beautifully.
So it's this Apple, I use this free stock charts because I can turn off the ads because I have the paid account, but I have that on my other screen so I can review the scans and I can show this here. And at times when we're going to look at the scans, I'll just switch to that other, the other platform that have everything on. But one of the things to look at with this Apple, and I'm looking at it like, what might be holding this here? Well, in part, the market isn't blasting off. It's just hanging at that resistance yet again. But if you were to look at a 24-hour chart, and I can't on this thing, I don't think. But anyway, you probably can on yours. You see how Apple sold off a little bit pre-market and then came up into the pre-market resistance. So it's stalled there. And so those that are trading gaps and, the first 5 minutes or so, they're going to take a look at that pre-market chart. And even though there's low volume there, you see dots and dashes and, with Apple, you do see some complete candles. I'm looking at a 1 minute of that 24-hour chart on my other system. It comes into play. That being said, it's hanging here and it, as long, just like the markets, as long as it hangs here for a while, which is desirable because, this is a nervous market, as it builds up some support, whether it's 15 minutes or 30 minutes better, but, we don't always get what's on our wish list. If things take out the highs, the S&Ps and Qs, well, that's going to be a signal go long. And then we just say, hey, intelligent hope mode. Let's hope it's not going to be a breakout failure. And the Q's poked up above the high of the day and it's attacking the next resistance.
Oh, shoot. Yeah, I'm all right. I'm adjusting trades, but I'm going to sell some puts on spiders right now myself.
McDonald's looks really good here. And, it's a bottoming pattern, but it's been going sideways at resistance, and the 200 is taking out that little shelf there. Get a put spread on that, Dan, or possibly even, maybe a debit spread makes sense. You can see the head and shoulders bottom on the daily.
All right, yeah, 1 second.
Yeah, it becomes tough. Like I said the other day, I mean, when, if things do start turning, it's just going to be so many opportunities that it's difficult to take advantage of. But that's what I mean on the daily chart of McDonald's, the breakdown, which turns out to be a downside shakeout, the consolidation. It's almost textbook. And then this bullish price action right there at that resistance. And this should continue to go higher. I'd like to say it will go higher, but that we never know. So I've always had that, always other scenario in my back pocket to stay objective about what's happening. Here we go. Buyers stepping up here.
Yep, I'm selling puts all over the place here for Friday, for Monday, for Wednesday. All right, now let me look at McDonald's. Wow. Yeah, remember when we were shorting that and we canceled it? Well, we actually had that one breakdown bar was actually a bad print, and that's the day we put it in the letter, but it didn't trigger.
So everything looking pretty darn good here. We got another high up there in the spiders. And when I look at a prior high, such as this, it's always a thought, is it going to get through it? Is it going to fail there? But I have to make some assumptions based on how the chart formed. So my assumption in a situation like this is because of the sell-off and the resumption up and down and up again in this consolidation, that while it might stall there, it should be able to get through it. Now, look at the hourly, and that's what that same area right there. So maybe it stalls, but as I've been talking about for a few days here, the expectation is that this is going to go higher.
Yeah, Greg, there's no juice on McDonald's, so it would have to be a directional.
You mean an outright call or?
Either call or stock, either one. Wow, that Bitcoin that we talked about yesterday. Wow, look at that gap up in the ETF, GBTC. Yeah, something's up in Bitcoin land today. And yesterday. See, the charts gave us a little heads up.
Well, the futures are up 800 points today, Bitcoin futures.
Wow.
They're at 77.45. They were like under 7,000, 69 something yesterday, I think.
Man, I wish this GBTC had charts, options.
Apple looking good. Those kind of patterns, nothing has to happen. But this type of a pattern, let's just get this out of the way. This type of a pattern, especially with today's this gap, they have to go higher. They should. You look at patterns and you look at what happened, over decades, and of course, that's how we make our decisions, is these price patterns, and that they're going to follow through. And then we manage them accordingly, because sometimes they don't obey the rules.
Right. It's just like the FedEx man, dropping a package or delivering to the wrong address. It's his trade. And just fix it. You manage it, similar to a pilot. He doesn't complain that the weather, storm happened, or passenger got sick, or, some smoke coming out of the engine. You just deal with it.
So our Apple, obviously it's got to deal with that high, which it's coming into. And the markets are stalling here a little bit. But the first, that 5-minute bar is a wide range bar. Let's take a look at that. So, there's the wide range bar. And we got a little stall, which really should not be any big deal. Right? So this is how we constantly or continuously update the information. So right now, we're like super bullish because we've been waiting for this for days, and now we're breaking out above some resistance, but we have to keep, that bias in check. And the concept of bar by bar analysis, that's one way of doing it. And then, one bar does not necessarily mean anything of great significance. But even this being a little minor topping tail right there, I mean, if that is ignored, what it communicates is that buyers are stepping up on little micro dips when you get that kind of, little topping tail being ignored versus some type of minor retracement into the wide range bar. So we combine concepts that we teach, bar by bar analysis, with retracements, support, resistance, relative strength, and relative weakness. So I look at the spiders, and I'm going to compare that to what are the Qs doing? So they look relatively the same. And one of the ways to look at that, and just really clearly and quickly, is how we use the moving averages. It's just a 5-minute chart, but what I'm telling you is applicable to any time frame. So look at the arrangement of moving averages on the 5-minute chart here. That purple line is the 60, which is, as I explained the other day, the 20 MA on the 15. And the red line is equivalent to a 20 MA on the 60-minute. So those 3 time frames, you can see that this is improving, but no, the 20 on the 5, which is the dark blue line, is below the 60. So that communicates to me and to you, when you get used to reading these moving averages, is that this correction, right, has been improving, but because the 20 is not above the 60 and pointing up, it's at the beginning of a move here. So assuming this continues and accelerates, what'll happen is that 20 will get above the 60. It'll start to rise. Prices will eventually pull back, and that moving average will start to point higher in a 45-degree angle. So we see the spiders here, the 20 is below the moving averages. And so a little bit more of a correction is what that would tell us. Now, that aside, these moving averages are intersecting through the prices, which that in of itself at this point is a message to stay away. Just sit on your hands, because this is what we call a frog in the blender type of pattern going on there. So moving average intersecting through the middle of prices is a message to stay away. And of course, this changes as you change time frames, and over time you learn how to read your multiple time frames. But my moving averages, sometimes I'll say just disregard them if I go to a different time frame, because if I go to the weekly and I had these same moving averages on that chart and there's a 200, it really doesn't mean anything to me. Whereas on this 5 minute, it relates to that hourly time frame. The 60 relates to a 15-minute time frame. So in this 5 minute time frame, I'm observing multiple trends and saying, is trading in this time frame right now favorable? Well, it is, because it broke out just based on the price pattern, but the move based on the moving averages is just getting started. So assuming prices continue to move higher and these start to move higher, I'll be able to make assessments as to being extended, diverging, and so on. There's a lot of information that you can gain just from looking at the relationship of moving averages to each other and to price. Apple's holding up well. So, this hourly chart, we've got 35 minutes to go. So I would love to see this hourly bar stay like this or grow even bigger. And at that point, your bias is that, yes, the position that we took the other day is following through, just beginning. But with that hourly, if we get a big green bar, we can then go down to our 5 minute and buy pullbacks and breakouts. If I can, this comes up. Yeah, it does. Okay. Don't try to make any sense out of that mess right there. What I wanted to show you is what I'm looking at my other platform here is this tick. And I don't look at this in a candlestick format over there or with moving averages, but it's pulled back into the zero line, and potentially this isn't updating in the same way my other system is. But anyway, there it goes. Getting this double bottom here, which suggests to me, because historically that's what it does, that the market should start to pop higher. So we had the tick pulling back and, relative strength, relative weakness. Look at the spiders did. They just consolidated there. Well, the tick pulled back, and then as the tick retested that, and I didn't know what this was going to look like when I brought it up. However, that tick setup suggested to me that the markets were going to move up at that time. doing a few scans here. The other thing to, if you're looking at that tick on your own platform as an intraday trader, is let's assume for a moment that the market continues to push higher this morning, say into 11 o'clock, 10:30, 11 o'clock. We'll see how far it trends. And you don't have to watch this, but set an alert up here around 900 or 1,000. So, and just, being aware that this came down to the zero line and was chopping around gave me an indication that the market would move from its sideways consolidation because of that relative strength. If this pushes up and tags 1,000, it would be a positive. However, in the moment, what it would signal is the likelihood of another stall in the market, and then we would measure how far does it pull back at that time, or does it go sideways again? As this dropped, the spiders went sideways, relative strength. So it gives you a very clear, objective way of measuring what's happening in the broader markets with a market internal. There are other internals that you could use, but you don't want to get caught up in looking at too much because you don't trade those. But that particular market internal is the one that, just give me one market internal to utilize during the day, and that is the one that I do use. Years ago, I'd look at the advanced decline line, up down volume, the trend. And you know what, when you just focused on trading the futures market, which that's what I did exclusively at the time, that kind of information can give you a little bit of an edge. But, trading stocks, which could just totally disregard the markets at times, one in a particular sector, just utilizing that NYSE tick when it's at extremes or, relative strength weakness, can give you really great information. Or Apple is doing fantastic. I know this is a 1 minute chart, but this is what I was telling you about moving averages, where this was just getting started, and the 20 and the 60 were below the 200 and flattish to down. And now as the move starts, the 20 is up above and facing higher. Now, look what Apple did. This is just a 1 minute chart. Based on the daily and what we've talked about there, it really isn't meaningful. But there's a hesitancy right now in the moment as far as Apple, because it broke out of this consolidation, the inside bar, and now it's taken out the low of the inside bar. So that is the trigger of a breakout bar failure, but it's only on a 1 minute chart. So these concepts, are universal to every single time frame, but you have to know how to put that signal in combination with multiple time frames. So, based on the hourly and the daily, and what we've covered there, do I want to give up my Apple shares because of a 1 minute breakout bar failure? No. If that was an hourly and it was up at, some, resistance, say up here, if I was looking at the 1 minute, yes. And it's enough. It also hit the tick hit an extreme. Sure. But right now I've got an hourly chart that's made a big bottom and a consolidation and a wide range bar breaking out of the range. That 1 minute bar is not, and whatever happens here, that is how I would interpret this. And my point, what I'm saying is, if this thing now drops $1, I'm going to be like, crap, all of, what I'm saying, and this actually dropped, but I have to go with historically what these patterns in combination with multiple time frames are telling me. So, from a very short-term perspective, it got a little extended, but it's supposed to get extended when it's coming out of a base. That's what it's supposed to do. So now, based on everything that I said, of course, my assumption is that it's going to go higher. So this little pullback is where I'm going to want to add to this. Do I get a buy set up on a pullback? And now I'm going to measure, if it does pull back, the depth of that retracement, which will tell me about the strength or demand and why, the strength of buyers and sellers. Now, if it goes sideways over the next half hour and doesn't pull back at all, wow.
Yeah, I'm just making some adjustments here, but everything is looking good, except this stupid Lennar of ours. Volatility came in nicely. NOC and OC is working. Our oils are working. Greg, CMTL from yesterday. Look at that. We were watching an hourly pullback, and I missed the gap breakout today because I was focused on the spiders in our open positions. But beautiful 1, 2, 3 pattern. Look at that.
CMTL. Yeah.
Beautiful. That is just textbook 1, 2, 3. Wow. A double wow.
I'm going to put that one in the seminar.
I was just doing the same. Because I have a draft of all our, guerrilla trades, and I'm going to put that one in it.
Dan, CXX for a put spread.
CXX, wrong symbol.
CSX.
Oh, SX, the railroad. Yeah, and see, that's a beautiful example, folks, of how we can trade mess, MESS. Look at those bars. I was telling Tim on whatever stock you were asking me earlier, Fleur, that I wouldn't trade it because I don't like the bars. But look how easy it is to say, hey, I'm just getting paid to say that support's going to hold on this mess. That is the beauty of options, one of the many. And then so the next question we go through is, and it's very juicy for next week, Greg, so that's telling me there's earnings coming up. Were you trying to suck me into it?
Let's see. I didn't look at it on the other platform. Yes, you're right. 417.
Yeah. And because it has a history of gapping down, I wouldn't touch this over earnings myself. But I guarantee you the boys at the Buffett Foundation trading floor, I think Buffett owns this part of this railroad, or one of them for sure. I would be shorting the heck out of puts on stocks that you want to own long term into earnings to get the high volatility premium. I would, and that's actually part of our master traders consulting division is we do exactly that for hedge funds and high net worth individuals. Like we still have one client hedge fund who specializes in gold. And he just gives us a wish list. He says, here's 8 symbols. Here are the number of shares you can accumulate for me. And you all have a good time.
Facebook's not getting any love today.
Greg, banks are bouncing a little. KRE, maybe a put spread there. And with earnings coming up, that's why it's a little bit juicy.
Pick up and selling here. I mean, nothing huge, but the ticks broke to a new low on the day. It just means they didn't stay in the upper part of the range there above zero. Not that they're going to any big tick extreme, but right now, buyers have backed off a bit.
We have a put spread on Qs that expires tomorrow. Let's see if we can close it out at a penny or two. 153, 148. Yep, a 1 cent debit. Beautiful.
Buyers just backed off, and this is okay, as long as it doesn't retrace too far. We'll see how it holds up. Sometimes it's, we want to see these things run as much as possible, but sometimes if they stall for a while and then they go further than what they might if they just continue to run up, because the faster they run up, the greater the inclination to sell it, and then the deeper the retracement.
And that's exactly how I started learning to trade, watching Animal Planet. You learn about the strong animals, the weak ones, what they do after they run long distances, after they fight each other, their eating habits.
I didn't know that was a market channel.
Absolutely. Animal Planet. So after, some animal, poor deer, gets attacked or whatever, and he's injured, then you let him stand up if he can, and you see how far he can run, and that tells you, how weak he is.
Come on, Dan. Are you talking about your girlfriends or this on Animal Planet?
Well, that applies to many disciplines. I was just looking to see if we can do another put spread in the queues for next week, but I mean, the 154 is way the heck down there. There's no juice. We could do the 157. But yeah, we've been nailing these put plays recently with the high volatility. 157. 150 is 55 cents. That's not too bad. What do you think of that 157 strike for 8 days?
I would tell you it seems like a no-brainer. Cautious with that comment, but just based on what I've been saying and the the price action, it would seem that it's not going back down there. 8 days, it's, over the weekend and all, but
Right.
you never know.
Yeah, I've been selling puts in the spiders at 3 different. I've been selling them for tomorrow, for Monday, for Wednesday, and Friday. I have 4 strikes open. I mean, expirations. And we have a directional in the spiders also, as you know, in the advisory letter. Yep, that one we're over 50% of max profit.
Yes, Tim, they do. That's why, when the volatility is high like that, being able to go to those spider options, and I mean, when the volatility really cranked, they were, the premiums were huge. We were selling them what a day to expiration, Dan?
Yeah, we got like $1.75 for like $8 out of the money. It was insane. And that's when we just love trading in times of panic. And it's like the analogy I give in the volatility class is, Greg and I are down here in South Florida where hurricanes like to visit us every now and then. And it's like having a hurricane offshore, 100 miles away, 200 miles away, whatever the case. But we're in the weather station and we have this sophisticated equipment to say, well, it's turning to the northeast and it's, going to hit the poor, the northeast coast and avoid South Florida. And we're selling flood insurance, tornado, flood insurance to these people in South Florida who are scared out of their minds. And we're selling it at very, very inflated, juicy prices because of the risk. And that's the analogy when the market's tanking, Rocket Man is fighting with Trump, and we got wars going on with Syria, and the world is just scared. And I like Greg's term, cranked. So the volatility cranks, which makes the premiums juicy. And that's the word I was answering for somebody yesterday.
Because I don't know.
So yeah, we got to start using that word cranked more. That's a good one.
As I don't, this is probably not going to do anything. Now I understand it's showing relative weakness to the market, but some of these beaten down things, like Snap, and I'm going to bring up Disney because it's got a similar intraday pattern. But, to set alerts here, because if it gets going, it could make a decent move for, a day trade, intraday, or even a 1 day, assuming that the market holds up. So set an alert there. It could happen or not happen, but whatever. And then Disney, overall sloppy bottoming pattern, but the daily pattern doesn't have to be fantastic for day trading, meaning, this is sloppy on the daily and I'm not interested in it from that point of view. However, we've got this consolidation going on here. And if it can get through it, again, I set an alert and I just forget about them. That looks like, some kind of news that brought it back from the dead. A gap up like that.
Yeah, Sanjay, when I said, what are you thinking? That wasn't rhetorical. It means tell me what you're thinking, or what type of trade and what time frame are you thinking?
The concept that I'm talking about is similar to here, but here's one that actually followed through. Meaning here was a choppy sideways 5 minute, above this consolidation, and this one broke out. Now, completely different, sector of the market, but we start the learning process through a broader view, meaning this is the pattern, there's multiple time frames, so on and so forth. And now you can bring in other analyses, market internals, intermarket analysis, sectors, and so on. And of course, we always take some note of, we have a tendency to focus on what's strong in a strong market, of course, but also take a look at what is weak. And Tesla is doing its own thing today. It had moved up nicely, and now it's got this little double top, and looks like it, especially if if markets even stalls. I mean, I just noticed this now, but this could be a good short for day trades. Not at this point because it's at the prior low, so I have to apply the same type of pattern that I would in a smaller time frame, meaning I'm not going to short at support. Momentum slowing down a little bit here. I'm going to show you how we can see that. That doesn't mean the move is over. It just means I have an objective way of monitoring if momentum slows down.
Is that are you going to talk about your monster spread red zone target oscillator?
I gave that up like 30 years ago.
Oh, okay.
I sold it to somebody for a lot. You look at the distance between highs, and then as soon as the next reversal forms, you take note of the distance between the highs. And this just made a peekaboo above the other high, and it's forming a reversal bar. So that doesn't mean that this trend is over. It just tells me that, buyers are getting nervous here and backing off a bit versus a market where, buyers are more aggressive. You see the same kind of little pullback pattern result in a measured move. And that's not happening today. So again, we always have our objective analysis tools to keep us in check as to, what's happening. And, I believe it's going to go higher, and, I still do. But at this moment, as we come into, it's 10:30, and sometimes 10:30 is a point where, trends end. It's one of the reversal periods that is held up for, I guess a couple of decades that I've been, using that. When I first started doing this, virtual, going back in the history, and there was no internet, but when I was able to download,
there weren't even automobiles when you started.
Yeah, they were. They didn't have any automatic transmissions or air conditioning. But I would just print out a 5-minute chart of the S&P every single day and mark it up with different patterns and what my observations were. It's part of my learning at the time. And I came to realize that, hey, these things turn at certain times of the day. And this was back, 92, 3. And, as I started to show others that, now you hear people talk about reversal times because most of them have been students over the years. They bought a DVD, whatever. So here's a trick. You're long. Let's say you're long the spiders. I am. We're long here, and we see this slowing in momentum. And it's like, oh, this is saying that it's going to go down. Yet, what you looked at from the daily chart and the hourly chart, as I explained, says it's going to go higher. But you're looking at this. What do you do? Rather than react to what's happening right here and sell, which is something that we've all done by looking at what's happening here. And then even though we have a bias from a higher time frame analysis, we go and we sell anyway. So it's kind of like a trick question, but this is what you do. So I say, well, what's the problem now? You can't see it. Oh, I've condensed the data back into that bullish pattern, and I've got an hourly chart, and prices are consolidating here, and there's nothing wrong. So hold on. And sometimes you get bit for that, meaning, yeah, it pulls back hard, and it's going to be a crazy kind of market, of course, but, we're going to have our lines in the sand, and, but if this is going to go higher, as I've been saying for days that it should and could, this consolidation will work out, and then prices will move higher later. Many get attracted to the scalping, which is okay to do that. I mean, you can do both, kind of like a longer term intraday trades and swing trades. And then, those that get attracted to those that are trading, even from some of the same charts that I'm looking at, whether it's a 5 or a 2-minute chart, but, they get in there and grab 3 cents and a nickel and, whatever it might be. And they show, oh, look, I made 500, I made $1,000. Well, sure, maybe they did, but, you have to put on a decent size position to do that for those little micro moves. And the majority that get attracted to that, they try to emulate that and get destroyed. So an experienced micro trader can certainly do it, but so many that get attracted to doing that, they just get annihilated. And it's kind of like, leading the sheep to the slaughter. But, they're telling them that, yeah, I'll teach you how to do this. It's kind of like, why teach somebody to run when they haven't been taught to walk? You know what, Dan? I never disconnected YouTube.
Really?
I thought I did, but I didn't.
Good job.
No, but nobody's talking to me. I don't know if they hear me. I would assume so. I don't know.
You know what? I don't get any alerts or anything that we're live.
Do you get alerts when I put that video this morning? Did you get an alert?
No.
Did you press the bell when you subscribed?
Yeah.
It's unusual. I mean, maybe you have like pop-up alerts turned off on your computer for that, because Some of the things that I like to, yeah, David got alert. Well, some of the things that I like to follow that are on YouTube, this little box pops up right on, from my taskbar, the lower right of my computer, and tells me. I'm typing in there, telling the people talk to me. I'm assuming they can hear because it shows that there are people watching. Let's see here. Oh, okay, cool. Well, I didn't know if you guys could hear me. And I was wondering if you could hear Dan speaking. Hey, how you doing?
And
well, I'm going. Now people are asking me, typing in here. I got them to. So I'm going to do it every day, like in the morning, and before the market opens, to go over, what I would normally have done in the videos. But as far as broadcasting on YouTube every day, probably not, like for the length of time that I am now. I actually meant to turn it off and I didn't press the right button. So it's continued and I just left it on.
oh yeah, I guess open it up. Yeah, you can also see the chat there. Okay, yeah, I was wondering, could they see our chat with our members? And they can't.
That's cool. So they hear you too, Dan.
Yeah.
I mean, you're in the room, but since this is something relatively new to us anyway, I didn't know, that you would come through because, since I was the one that turned it on, but that's great.
Right. So now I have to be more careful about talking about your historical activities.
Yeah, we don't want to put that out there.
Well, good. I hope those viewers were participating in some of our aggressiveness of the spider breakout today.
Huh.
All right, Hill Philly Girl. Do you want to explain to us, please, how you got that handle? Philly means Philadelphia, as opposed to Hillbilly Girl, and you're number one. And you live on a hill in Philly. That's what I take out of that.
Oh, cool. You guys, Hill Philly Girl, you are whiskey from Gaps and whatever, Gaps or whatever that's called that I post in there sometime. Yes, that's what I thought. Cool. I remember the email that you sent to me probably at least a year ago about doing a webinar for the people in your group there, which I told you I was working on a lot of stuff. But we could definitely set that up. And then, because, you told me that some of my prior students would do stuff for you guys, but things didn't come through quite as clear as you would like, or had questions about certain things. So we could set that up and do a webinar for your group. So I don't know what things and dates that you guys have set up, but email me and we'll set it up. So right now, this is what I call being in intelligent hope mode. Meaning I've done this analysis as I've explained it, with this bias that, the spiders, Apple, generally, of course the Qs and such can go higher. So until something of significant happens to change that bias, that's what I call I'm in intelligent hope mode, meaning I hope I've done intelligent analysis. It's working out so far, and we'll continue to monitor it objectively. The tick chart, I generally look at it on a 1 minute chart, Eric, but I do not look at it in a candlestick format. I just look at it on a bar chart. And for the most part, it almost doesn't matter the time frame. No, it does to some extent, but the point I want to make is what you're primarily interested in. Why did that look like that? Oh, because I have it on an hourly chart. What you're primarily interested in. Wow, it doesn't look anything like what my e-signal chart looks like, but whatever. This platform, I'm just using this free because I have it connected to my TC2000 subscriber thing, and it allows me to have it on a couple of different computers to just go through that over this. But your primary focus is just to see when the tick gets to extremes, and you can set alerts for that. What I explained earlier this morning was a way, and this looks nothing like what my e-signal charts look like. There's no detail whatsoever here, with this. So it really, you can't appreciate it, but you want to take note of, as I explained, extremes, which you can set alerts for, and then taking note of relative strength and weakness. So when the ticks poke down like this, that they did here, and they did on my other chart as well, the spiders actually held up near the high of the day. So while that selling became much stronger than what it was here, obviously, it didn't really affect the markets at the time. So we could see, like, what time was that, right? Was at 10:12 when the ticks dropped as they did. You can see that in the upper left. And if we look at the spiders, wow. What did I set here? A bar net change. Why does it look like that? Jeez. Oh, that's why, because I put it on bar. That's why. So at 10:12, there was a pullback in the spiders at that time, and on the 1 minute chart, there was a reversal on the retest, but buyers stepped up right at the prior swing low on the 1 minute and drove it right back up to the high. Let's go back to the tick. Now I can see better. The way I had that set wasn't right. So this is where I said this morning, I said, look, the ticks pulled back and they're retesting this prior low. this is where the markets should turn around and go up. And that was right just before 10 o'clock. And right just before 10 o'clock. So as the ticks retraced all the way, they retraced all the way from that 1,000 came down and then retested. And while they were going down, the market went up. Right? So strength. And it retested that low. That's where the markets resumed. And now the markets are trying to build or test to find where buyers are going to be comfortable here, or are we going to have another one of those days where strength just turns into total weakness and we go all the way back down to the lows? I wish I knew, right? Clearly, the selling is picking up a little bit more here, and the ticks are negative. That we'll see how far it goes. It's all we can do. I mean, there's no way around this if we're going to be able to get a bigger gain, if things are going to, since they've come out of this range, at least initially, if they're going to be able to hold up and go. So we just have to kind of go with it and stick around. And, the Apple's holding up a bit better than the spiders, but, overall so far it's just not a big deal. And we'll just have to wait it out and see. The snap that I was looking at, I did say that it was showing relative weakness, that maybe could get through those highs later on. That's not happening. So that's just a scratch off the watch list, but it was just an alert.
Hey, Greg, I just got an email from Yahoo Asia Limited that says we're delighted to inform you that I was drawn a winner of $550,000 in the Yahoo email lottery.
Mm-hmm.
So if I send this to you and if you collect it, then I'll split it with you.
Well, you probably have to send them $5,000 to get your...
Ah, that's right. For the application processing fee. Correct. It's amazing the junk we get. I love technology, but I hate internet pollution.
What's more amazing is that people actually send the money. I mean, I've seen those horror stories.
Yeah.
People call from, South Africa and calling up and asking people, and now you have to send more.
Well, I mean, some of them, they make them pretty darn believable. Like I was reading that one was in their, where they, they study your children and they say, hey, I got your son Timmy hostage here, and if you want me to let him go, send me $10,000. And they don't have Timmy. They just created this fear in your head that sounded very believable.
Yeah.
Because then they can't get a hold of Timmy for some reason, and they're getting pretty sophisticated. Yep, I'm just holding everything, but obviously not doing anything right now until the afternoon.
Yeah. Well, things are slowed down. We'll see what happens here. Right now, what's that? That's my 5 minute. This must have been my hourly that I had set up. Yeah. So, as I said, we see what's happening on the smaller time frames. We have to put it in the context of a bigger time frame. And, So another concept is that, look, the breakdown of higher time frames begin in smaller time frames. But that still doesn't mean that you go to that smaller time frame and say, oh, the higher time frame is going to fall apart. It's just part of understanding what's happening. Now, how do you use that to your advantage to make money? Well, you don't with this particular type of a pattern, a bottoming pattern. However, if we had a extended or climactic type of cell setup or some type of distribution pattern after an extended move, that is when we could go to a smaller time frame and see that the failure is beginning to happen there. Right? So you don't use that, here where you had the momentum shift and begin to break because it's coming out of a bottom. So if, let's say, it rallies up to 277.50 and then the momentum begins to stall and we see the deterioration of a smaller time frame, that is when we can take positions in a smaller time frame because the higher time frame is supporting that.
Here, Greg, check this play out. Google, GOOGL, for expiring tomorrow, sell the 1015 put and buy the 1007.5. Midpoint is 65 cents right now. I mean, I know we're at the hourly high. I get all that, but 65 cents for a day and a half under that entire big base.
I like it.
Looks pretty tempting. A day and a half of risk.
Well, let's do it.
All right.
I mean, unless our fearless leader, has a bad lunch and decides to press the big red button, I think we're okay.
Well, you can have that same disclaimer on everything. Mm-hmm. And then depending on how it closes, then we can also keep an eye on doing one for next Friday, but further out of strikes.
Yeah. Hillbilly girl mentioning 3M here on the alleys going sideways, but it's showing relative weakness. And, this interesting, this one, so there are little differences in patterns, meaning many stocks that have this similar pattern, they're doing it near the February low. This broke down through it. And even after it attempted to hold, yes, it did form the breakdown bar failure. And it did have that drop, but it's just not, you can see the difference in the pattern. make it very obvious by just going to the spiders. But you can see how it's happening near the February low versus 3M, which tells me it's showing relative weakness, and it is below the 200 MA. So what can I possibly do with this? Well, a couple of things. I could do nothing and focus on what's showing relative strength and see if the market does continue to follow through. Or if this somehow holds up and the market rallies and this does nothing, this is going to go on my short list. Right now, I would just, tend to leave it alone. It does something like, for some reason, a big breakout from there. It has earnings on the 24th. So still got some time to that. Home Depot is showing a little bit of relative strength here intraday. And it's really not doing anything on the daily. But what I'm looking at there, just chopping, but it's building this base here on the 5-minute. And so the question is, can it get through here? Let's see. It should. I mean, if the market does pick up it in momentum, and so here's it's pulling back, we're buyers there on the pullback, but not able to continue to follow it through. So, as we come, getting to be 11, another minute, 11 o'clock, and maybe it's just going to be. I'm kind of hoping, actually, a quiet lunch period where this consolidates, or maybe, has a retest and build up some support, and that would be pretty bullish. Of course, going down to the low of the day wouldn't be. But I don't know what's going to happen. So, as I said, we're in intelligent hope mode here. I would agree with that. Yeah, something that is has bigger ranges for day trading and in a range, absolutely. Look, anything that has decent movement and ranges, you can define the trend and support and resistance. You can trade it as a day trade. Right? You don't have to have the greatest pattern on the daily time frame. And when you're trading one or two instruments like I used to, where I just primarily traded the YM, the Dow E-mini, and the NQs, NASDAQ E-mini. And when you have that limited focus, you make the best out of what you have. Now, that eventually became like banging my head against a brick wall when the volatility contracted to a point where there really wasn't much movement. So, I stopped trading them for a long time. But, as long as things have, ranges and move, and you can define, it's just not a bunch of overlapping bars that are whippy intraday, you can trade them intelligently. Apple is holding up nicely. One of the things that, if you can scan for it, and, again, this is the free version of TC2000. And I'm not looking at the advertisements that are usually there because I have it connected to my paid account. But that being said, one of the things that you could start scanning for, even if you're, going through a list of stocks that you use at this time, is to start going through and looking at hourly charts. So if you can't, just using Apple as an example, a gap up hourly bar consolidating bullish, put that on your list for this afternoon, whatever's in this list. And then, you look at, of course, the trend. So again, big hourly wide range bar, but it's in a downtrend in that resistance, not as attractive as Apple, because it doesn't have the void above. And I don't know what this list is here, but it doesn't matter. Right? So this, not interested at all. Gapped up, slop. This thing churning higher. I know what the daily chart of this looks like, and I'm interested in this. I talked about it in the room the other day. I want to see how it consolidates here. Right? Hourly, not interested. Not interested. Costco, maybe. It's kind of wild and whippy on the hourly chart. No, I'm not interested. Right. Whippy, and so on. So this time of day, if there was a positive day like this was, or even if it was a negative day, scanning through your hourly charts. I mean, in this platform, it's on my other system over there, I can just tell it, show me hourly wide range bullish bars that trade between certain prices, that have the amount of volume that I want at a minimum, and so on. And I could even tell it, I only want to see those that are above even the 200-day moving average, or the hourly 200-period moving average, whatever it is. Right? Xilinx is a little interesting. Somewhat. So this is one of those setups where it could go higher, but it's not. It's certainly not. Here is a better looking one, right? That should jump right out at you as a better looking one. Bottoming, consolidating, right? Wide range bar, sideways there. If you can get through here, it's got room.
Wow, the Dropbox busted to a new high. Delta Bravo X-ray.
There you go. It's a nice hourly bar.
Now, if you didn't care about margin, you could sell a $32 put for 10 cents on a 10 lot. That's $100. Expires tomorrow. And $32 is $2 away. So $2 divided by $34 is, in my head, 1.75%, something like that.
Well, I guess part of that decision would be how much equity you have to put to work, because you're going to tie that up, right?
Yeah, it would be 20% of the strike price. So on a 10 lot times 32, and it's out of the money. So just roughly it'd be about $6,000.
Yeah.
Right. That's what I'm saying. If you didn't care about margin, or, I mean, I'm not going to do it. I'm just, if it was a better setup, not so extended on the hourly, I would definitely consider it. But we love selling options that expire tomorrow. These airlines are bouncing a little bit, but there's none of interest. With the transports finally getting a bid, I was looking at FedEx, but there's no juice for the put spread. Hey, remember you were looking at Run? That hourly, not so bad. I like the bearish gap that bullies yesterday.
Yeah. It's starting. Yeah, we're starting to get the rounding bottom and gap reversal there at the low. Interesting. Yes.
All right, so yeah, market's still drifting lower, and it's 11 o'clock, so I think I'm gonna take the gym break.
Okay.
So we'll see you guys in the afternoon.
All right, guys. We'll talk a little later.